Welcome everyone to the 9/12 Financial Group's review of the 9/12 Top 20 February edition. First off, let's read what we expected when we wrote this on February 18th. Still a crapshoot, still in a range. The same range we talked about in the last edition, 3,500 to 4,200. Can't really go up because inflation and higher rates. Can't really go down because of the new round of company buybacks. In the brief that the worst of the inflation/rate cycle hikes are behind us. But again, we are still in the range, and though some of the major indexes have moved into a macro uptrend, they did so in an unconvincing manner. We could break back below or test the top of the range. It would only take a couple of words from the Fed or a couple of economic reports to make it move. Anyone that says that they know what those would be are kidding themselves. Both cases for the next leg are equally convincing. The bear case is that we still have very high inflation. Earnings are low, tech is laying off a lot of people, home prices are still falling, food prices are still rising. Have you seen the price of eggs? And further expect rate hikes from the Fed. For the bull case, we had everything that was bearish, layoffs, falling house prices, poor earnings, and it was exactly what the Fed was. Bad news assures the Feds that the rate hike cycle is working, and that they can sit back and let the rate hikes work through the economy, evidenced by the fact that the last hike was only 25 base points, and future hikes are expected to be in 25 base point increments. Odds are that the next leg will be triggered by outside events and temporary. And where did we end up? Nowhere really. Premium sellers win again. Okay, let's move on to trade suggestions. Bank of America, we had it as an underperformed sell. BAC opened at $34.91. And the suggestion was to sell the March 36 call, which you could have sold at 51 cents with a stop at $36.06. It wasn't stopped. It could have been bought back at 5 cents for a profit of $46. If you went the stock route, you entered on February 21st at $34.91, and we're still in an open short at the end of the cycle with an unrealized gain of $209. Coinbase Global Inc., we had it as an underperform, sell, avoid. Coin opened at $63.32, and the suggestion was to sell the March 85 call, which you could have sold at $3.19 with a stop at $87.65. It wasn't stopped. It could have been bought back at 5 cents for a profit of $314. If you went the stock route, price would have needed to rise to the range of entry at $85 to $130 before providing acceptable risk-reward with a macro downtrend at a target of $20, which it didn't do, so let's move on. Advanced Micro Design Inc., we had it as a market performed sell. AMD opened at $77.15, and the suggestion was to sell the March 85 call, which you could have sold at $1.40 with a stop at $84.66. Unfortunately, it was stopped for $2.57 on March 7th for a $117 loss. If you went the stock route, you entered on February 21st at $77.15, but were stopped at $85 on March 8th with a loss of $785. ExxonMobil Corp., we had it as an outperform, hold BTFD. XOM opened at $110.80, and the suggestion was to sell the March 108 put, which you could have sold at $2.06 with a stop at $89.82. XOM closed the cycle at $99.84, causing the 108 put to close at $8.16 for a loss of $610. If you went the stock route, you entered on February 22nd at $110 and were still in the open long at the end of the cycle with an unrealized loss of $1,016. Cisco Systems Inc., we had it as an outperform, hold BTFD. CSCO opened at $50.76, and the suggestion was to sell the March 52 put, which you could have sold at $1.70 with a stop at $48.74. Unfortunately, it was stopped at $3.35 on February 23rd for a $165 loss. If you went the stock route, you entered on February 21st at $50.76, but you were stopped at $49 on February 22nd with a $176 loss. Verizon Communication Inc., we had it as an underperformed sell. VZ opened at $39.90, and the suggestion was to sell the March 41 call, which you could have sold at 45 cents with a stop at $40.34. It wasn't stopped. It could have been bought back at 5 cents for a profit of $40. If you went the stock route, price would have needed to rise to the range of entry at $43.50 to $46 before providing acceptable risk-reward within a macro downtrend at a target of $32, which it didn't do, so let's move on. Coca-Cola Company, we had it as perform, buy, hold. KO opened at $59.99, and the suggestion was to sell the March 62 put, which you could have sold at $2.56 with a stop at $59.59. Unfortunately, it was stopped for $2.81 on February 24th for a $25 loss. If you went the stock route, you entered on February 21st at $59.99, but you were stopped at $59.59 on February 24th for a loss of $40. Rivian Automotive Inc., we had it as an underperformed sell. RIVN opened at $19.68, and the suggestion was to sell the March 24 call, which you could have sold at 70 cents with a stop at $24.04. It wasn't stopped. It could have been bought back at 5 cents for a profit of $65. If you went the stock route, price would have needed to rise to the range of entry at $33 to $44 before providing an acceptable risk-reward with a macro downtrend, with a target at $15, which it didn't do, so let's move on. Intel Corp, we had it as an underperformed sell avoid. INTC opened at $27.11, and the suggestion was to sell the March 30 call, which you could have sold at 16 cents with a stop at $29.29. It wasn't stopped. It could have been bought at 5 cents for a profit of $11. If you went the stock route, price would have needed to rise into the range of entry of $34.50 to $38 before providing acceptable risk-reward with a macro downtrend with a target at $24, which it didn't do. So let's move on. Microsoft Corp, we had it as a market perform sell. MSFT opened at $254.48, and the suggestion was to sell the March 260 call, which you could have sold at $5.50 with a stop at $254.48. Unfortunately, it was stopped for $4.45 on March 6th, but because of the time decay, for the profit of $105. If you went the stock route, you entered on February 21st at $254.48, but you were stopped at $260 on March 6th with a loss of $552. Roblox Corp, we had it as an underperformed sell. RBLX opened at $39.31, and the suggestion was to sell the March 50 call, which you could have sold at 43 cents with a stop at $48.77. It wasn't stopped. It could have been bought back at 5 cents for a profit of $38. If you went the stock route, you entered on February 21st at $39.31 and were still in the open short at the end of the cycle with an unrealized loss of $438. PayPal Holdings Inc., we had it as an underperformed sell avoid. PYPL opened at $73.71, and the suggestion was to sell the March 80 call, which you could have sold at $1.09 with a stop at $80.51. It wasn't stopped. It could have been bought back for 5 cents for a profit of $104. If you went the stock route, price would have needed to rise to the range of entry at $95 to $120 before providing acceptable risk-reward with the macro downtrend with a target of 55, which it didn't do, so let's move on. Uber Technologies Inc., we had it as an outperform hold BTFD. Uber opened at $33.78, and the suggestion was to sell the March 32 put, which you could have sold at 86 cents with a stop at $32.39. Unfortunately, it was stopped for $1.10 on March 10th for a $24 loss. If you went the stock route, you entered on February 21st at $33.78, but you were stopped at $32.39 on March 2nd for a $139 loss. Occidental Petroleum Corp. We had it as perform, buy, hold. OXY opened at $60.54, and the suggestion was to sell the March 62 put, which you could have sold at $3.70 with a stop at $54.26. OXY closed the cycle at $58.47, causing the 62 put to close at $3.52 for a profit of $18. If you went the stock route, you entered on February 21st at $60.54 and were still in the open long at the end of the cycle with an unrealized loss of $196. NVIDIA Corp. We had it as an outperform, hold, BTFD. NVDA opened at $206.18, and the suggestion was to sell the March 205 put, which you could have sold at $10.20 with a stop at $179.71. It wasn't stopped. It could have been bought for 5 cents for a profit of $1,015. If you went the stock route, you entered on February 22nd at $205 and closed the position target on March 16th at $250 for a $4,500 profit. That was huge. Tesla Inc., we had it as an underperform, sell, avoid. TSLA opened at $204.99, and the suggestion was to sell the March 230 call, which you could have sold at $7.10 with a stop at $229.71. It wasn't stopped. It could have been bought back at 5 cents for a profit of $705. If you went the stock route, you entered on February 21st at $204.99 and were still in the open short at the end of the cycle with an unrealized gain of $2,486. That was nice. Devon Energy Corp. We had it as a perform, buy, hold. DVN opened at $53.68, and the suggestion was to sell the March 60 put, which you could have sold at $7.50 with a stop at $52.28. Unfortunately, it was stopped for $7.90 on March 10th for a $40 loss. If you went the stock route, you entered on February 21st at $53.68, but were stopped at $52.28 on March 10th for a $140 loss. Marathon Oil Corp. We had it as a perform, buy, hold. MRO opened at $25.85, and the suggestion was to sell the March 25 put, which you could have sold at 72 cents with a stop at $22.78. Unfortunately, it was stopped for $2.35 on March 13th for a $163 loss. If you went the stock route, you entered on February 21st at $25.50, but you were stopped at $22.78 on March 13th for a $272 loss. DoorDash Inc., we had it as an underperformed sell. Dash opened at $59.97, and the suggestion was to sell the March 90 call with a stop at $89.53. Unfortunately, it never hit the minimum amount of 15 cents, so there was no entry. If you went the stock route, price would have needed to rise to the range of entry at $62 to $90 before providing acceptable risk reward with a macro downtrend at a target of $40, which it didn't do. Lastly, Paramount Global, we had it as an underperformed sell. PARA opened at $23.13, and the suggestion was to sell the March 27.5 call, which you could have sold at 15 cents with a stop at $27.27. It wasn't stopped. It could have been bought back for 5 cents for a profit of $10. If you went the stock route, you entered on February 22nd at $23.50 and were still in the open short at the end of the cycle with an unrealized gain of $380. And that's it. Net, there was a gain of $1,327 on the option side and a $3,821 gain on the stock side. Another great cycle. If you are viewing this review and still not sure about subscribing, request a free trial edition at general@912financialgroup.com and you'll get the latest edition. No worries, no credit card needed. Thanks for joining me. Again, if you have any questions or comments, please send them to general@912financialgroup.com. Please like and subscribe.